Good evening. Welcome to the daily market analysis by sectors for August 17th, 2012 by howtotradesafely.com. Please pause this video to read the legal disclaimer below, and please note that this analysis is done for informational purposes only. Today, the S&P 500 had the longest weekly rally since January 2011. Taking a look at weekly prices, US stocks rose for a sixth week in a row. This is the longest rally since January 2011. Let us take a look at the actual numbers. All four broader market indexes went up. The most bullish was the Russell 2000 Small Cap Index, which rose 0.8%, followed by the Nasdaq at 0.5%, while the Dow Jones and the S&P both went up by 0.2%. The VIX closed at 13.45, a drop of 5.9%. This is the lowest close for the past 5 years. This is significant. It indicates a sense of complacency in the market, which makes me nervous. Light crude oil is also on an uptrend, although it's approaching its 200-day simple moving average resistance point. This is the Dow Jones. You can see it's going up, up, and up for 3 days in a row. It's already broken out past its class 3 is at a 3-month high. Looking at the 3-month chart, it's already at a high. Same thing with the S&P 500. The S&P 500 is actually on a 5-year high right now. The Nasdaq is also going up. All these are all showing typical breakout patterns. The Russell 2000 is also on a typical breakout pattern, but it is at its resistance point right now. Can it bust through this resistance? That remains to be seen. The VIX, as you can see here, is already dropped to 13.45. This is actually the lowest close that you can see in the past 3 months. Although if you go back and look at 5 years charts, you'll see that this is the lowest close in the last 5 years. Light crude oil is also going up, although you can see that the 200-day simple moving average at 96.72 is going to present a resistance. Taking a look at the individual sectors, we can see that 3 sectors came down, 4 sectors went up, and 2 sectors were unchanged. The 3 sectors which broke down were materials, healthcare, and utilities. Since healthcare and utilities are traditionally defensive sectors, this indicates a risk-on attitude. However, financial, energy, and materials, which are normally the risk-on sectors, are showing again a loss at an unchanged. The 3 sectors that are really showed the biggest gains yesterday were the industrial, the technology, and the consumer discretionary. Technology, I suppose you can put a large part of it due to the rise of Apple. But that is the daily analysis for today, August 17th. Please make sure you check the weekly analysis, which is more accurate, which will be uploaded within the next 2 days. Thank you very much.